What is good, fam? Wah. What up, dogs? Today I'm gonna be giving you what I honestly consider to be the most important lesson of the entire mentorship. I know that sounds crazy because you're thinking, how would the models not be the most important lesson? Um, but in all honesty, there is probably nothing more important on the planet. On the planet? What did I just say? On the planet than mastering draw and liquidity. And the way Blake and I have done that over the years is by utilizing something called conditions. This is a concept I sort of created to describe the most important PD array at the current moment that I will use to determine the next draw on liquidity. And so I'll get into that. But I really want you guys to take notes on this lesson and pay attention. Like I always do with you guys, this is the way I like to teach you guys. I like to show you simplified versions of stuff, and then we go into real life examples. So that being said, let's get in to conditions. So need to make myself smaller. Okay. The whole goal of conditions is to turn assumption into confirmation, which eventually turns into execution, right? So with trading, people think that you need to know what's happening all the time, which the reality is nobody actually knows what's happening. And you truly can never predict what will happen in the market. The market can do whatever it wants, but your goal is to be reactive. So I really want you to understand what I'm trying to say here. You don't have to predict what the market will do. You have to react to what the market is telling you. I'll say it again. You don't have to predict what the market will do. You have to react to what the market is telling you. And this is what conditions is going to teach you. This is what conditions will allow you to do. It is the number one way to find the next draw on liquidity. So here's some examples. If price is in bearish order flow, right? We've been bearish really strong for a while, just delivering lower, and we eventually hit an hourly PD array, okay? We hit an hourly PD array, and now we're thinking, okay, maybe we're bullish now. Or at least that's what the average person would think. Well, now that we've traded into a 1 hour, 4 hour fair value gap, we're bullish now. But that's not true. You have not gotten any confirmation yet that you're bullish. Sure, you can say it's an educated guess because maybe you tapped into a 1 hour, 4 hour, but if price is seeking something lower, it'll just run through that. So what are we looking to do now? We've created an assumption. We said, okay, I'm thinking price could bounce off this hourly PD array. But now we want to look for confirmation. And so we usually find confirmation through a 5 or 15-minute invalidation. Why? Because let me explain this. If price is delivering lower and it hits an hourly PD array, keyword hourly, and we're executing on the minutes, then we want to find an intermediary person, a middleman, to align these time frames, to align the higher time frame assumption with our lower time frame execution, and that's what we call the confirmation, which we find in the condition. I hope you're listening. I hope you're picking up what I'm putting down here. So one way we can start to build confirmation is after we get an hourly PD array traded into, we can look for a 5 or 15-minute fair value gap to get invalidated. Very simple way, right? So we trade into like an hourly fair value gap, and now we get a reaction, and we inverse a 5 or 15-minute fair value gap. Now that's our confirmation that we want to go higher now, most likely, right? But what do we look for now? We look for a condition. So if we're looking at this leg right here, and we see price trades lower, it hits that hourly PD array, we then invalidate that 5 and 15-minute in this leg, and now we come down and we trade into this newly formed 5 or 15 minute fair value gap, this is going to serve as our condition. So our condition is the most current PD array, well, let me be more precise, the most current 5 or 15 minute fair value gap that we have, which we will use to determine if price will continue in a direction or if it will flip order flow. In this case, we've been bearish. We've been bearish. And after hitting an hourly PD array, we finally opened up a bullish 5 or 15 minute fair value gap. And so we call it a condition because what this tells us is that if price respects this condition and we get an inverse to the upside, we've now gotten that confirmation and it's time for execution that we want to, that we can take the trade and target any buy side above. But if price inverses this 5 minute condition, then we can assume price will want to continue going lower beyond this hourly PD array. All right, so now let's get into a little bit more specifics, right? I got more for you, don't worry. So the whole point, the whole fucking everything of trading is to create a condition for price to reverse. That is your assumption. You wait if price respects condition. That's your confirmation. And then you enter without hesitation if entry model presents. That's your execution. And the goal with trading is to develop as much confirmation with confluence in order to execute high probability trades, right? Because we're trading probability. This is a game of probability. And we just want to stack as much probability in our favor as possible. That's how we create these models. That's how we create everything. It is all through probability. All right? So I really want you to understand that because the whole point of the game is trusting probability, that it's on your side. So now let's get into a little bit more specific examples, if we may. If price is trending lower, right, and we hit this hourly PD array, and we get that bounce up, and we create that 15-minute fair value gap, which is going to be our condition, this will be our assumption. So a 15-minute bullish fair value gap finally opens up after price continuously delivering lower. We then hit that hourly PD array. If price were to truly be bullish, this 15-minute should be respected. That is our condition. So far, all we have is an assumption. We are assuming that if this 15-minute gets respected, then we should seek higher prices. If it gets ran through, we should seek lower prices. So now we can see here, price trades lower. We hit this hourly PD array. We open up this 15-minute. Price trades into this 15-minute. And now we're respecting it. We see that we're getting a reaction off of it, right? We're getting that confirmation. So 15-minute gets respected. Therefore, we've gathered more conviction for a bullish draw and increased our probability. Now that we know that this 15-minute is holding, this 15-minute that we created after hitting that hourly PD array, we're stacking up that probability and that confluence that price wants to run higher. We're not just assuming, we're not just going off an assumption and predicting, yeah, price is going to go higher now because we hit this hourly PD array. No, we're building that probability in our favor. We're generating, we're identifying structure that is validating this thesis that we want to go higher. And so now that we see that price is respecting this 15-minute, we want to start marking out what our targets could be. This internal high is usually going to serve as your first TP almost every single time. You're then going to have any buy side above that you want to target maybe, and an unfilled 5 or 15-minute fair value gap, ideally, nice little mech. And so if condition gets respected, mark out targets and respect with your draw, identifying targets. I can't emphasize this enough. I've said this in my previous lessons with you guys. You need to keep your charts clean. You only mark out what you're looking to target, not what's going against you. If you're getting confirmation in a certain direction and you're taking a trade towards that direction, simply mark out what your targets are. And your targets should be areas where you can anticipate rejection, which is why they're targets. You take profits at areas that are high probability, most likely going to, where price is going to reject. So once again, let's run this back. Price is trending lower. We hit this hourly PD array. After hitting this hourly PD array, we get a reaction and we open up a 15-minute fair value gap. That's a condition. 15-minute bullish fair value gap finally opens up after price continues to delivering lower. If price were to truly be bullish, the 15-minute should be respected. That is our condition. This is our assumption. 15-minute gets respected. Therefore, we've gathered more conviction for a bullish draw and increase our probability. 15-minute gets respected. And if condition gets respected, we mark out targets in respect with the draw, identifying these targets. Cool. Since condition is respected, we simply need final confirmation, which will be an inversion of the highest time frame fair value gap of the current trading leg. Once inversion setup occurs, execution. So since this condition is respected, we're respecting this 15-minute, we want final confirmation, which will be an inversion of this leg that trade into the 15-minute, the highest time frame fair value gap, highest time frame bearish fair value gap in this leg that trade into this 15-minute. Once that gets inversed, execution. And of course, we have our targets. And if we break it down, we have here. We tapped into higher time frame bullish PD array. Price invalidates 15-minute bearish PD arrays plus. So we're assuming that we're invalidating some 15-minute or 5-minute bearish PD arrays here. Price opens up a 5 or 15-minute bullish fair value gap condition. That happens right here. That's step 3. Price trades and respects condition. Price trades and respects condition. Inversion setup presents itself. We see that we have an inversion opportunity here. And we get that inverse, and now we target for targets for price to trade higher. We mark out our targets for price to trade higher. There is a reason we should deliver higher. What does that mean, right? A lot of times people will take inversions or just, for example, even like if we're just talking about conditions, people will just assume because a 5-minute bullish fair value gap is getting respected, we should go higher. But you always need to be thinking, is there actually a reason to go higher? So that's always something that should be in the back of your head. You need to make sure that there actually is a narrative for price. So condition timeframes. Ideal condition times to support entry are going to be your 15-minute and your 5-minute. I always use the 15-minute and the 5-minute, right, as those conditions. I don't really use any other time frame. Conditions are the ideal scenario. It's what splits the two possibilities. If condition gets respected, we go in that direction. If condition gets disrespected, then we go, in the other direction. And so it keeps things like pretty like in a 50-50 mindset in a sense. So let's say price is trending higher. Price is trending higher. Price is trending higher. We sweep out London highs. We get a reaction and we open up a 15-minute bearish fair value gap. That's going to be our condition. Why? Because naturally we're going to get a reaction most of the time if we sweep London highs or London lows. But whether or not we know if that reaction is a start of a reversal or just a reaction and we're going to continue higher, we're going to confirm that through a condition. This is our middleman. This is a transaction between the higher time frame and the lower time frame. So if we see that this 15-minute bearish fair value gap gets respected and we get inversion to the downside, we'll expect price lower. If we see this 15-minute bearish fair value gap get inversed, we can expect price to keep going higher above London highs. We can also do lower time frame, just PD arrays getting hit and conditions. If we're taking a very simple PDI model, simple PDI to the upside, targeting accumulation zone highs, or maybe a MEC model towards an unfilled gap, right? Price is trending lower. We create some low resistance liquidity. It manipulates lower, hits that 15-minute fair value gap, which is our condition. If we're going to respect this condition and get an inversion to the upside, we can expect price to trend higher and take out this LR, hit this unfilled gap. So you're constantly creating conditions until your draw is confirmed. And you can have higher time frame conditions and you can have lower time frame conditions, right? Your lower time frame is going to be what I was just teaching you, those 5 and 15 minutes. But the idea of conditions is something you can really use in all time frames. So let me show you what that looks like. If we're doing like a higher time frame, I guess, bias analysis, and going into the morning, I see that we swept London lows and we're trading inside this bearish 1 hour fair value gap. I see that we have London highs above as a potential target, but we also have previous day low below as a potential target. So how do I know which one to focus on? Do I focus on London highs or previous day low? Well, great question. That's why we create conditions. We're going to use this 1 hour bearish fair value gap as our bias condition to see whether or not we want to go to London, whether or not we want to focus on London highs or previous day low. So the same concept applies, right? But this is just for determining your bias. So it's not that serious compared to the lower time frame conditions. But let's say that 1 hour fair value gap gets inversed. What's going through my brain now? Okay, we inverse this 1 hour bearish fair value gap. I'm no longer focusing on previous day lows of drawn liquidity. As you can see, I'm no longer having marked out. I don't care. We've inversed this hourly. I'm not expecting price to trade down to here. And I'm bullish towards London highs. So do you see the whole dynamic of how my targets and everything shift, it's like because of conditions, I'm able to visualize and see clearly what the next target is. And I'm not over analyzing things. That is the beauty of conditions. Now, let's say the hourly fair value gap, bearish fair value gap got respected. We're respecting 1 hour bearish fair value gap. I no longer care about London highs. As you can see, I no longer haven't marked it out. I also don't even care that we swept London lows now, because the sweep of London lows would most likely tell me that we want to go higher. But based off my condition and this getting respected, I'm being told that we still want to go lower. So why should I even have the London lows getting swept marked out? It's only going to confuse me. So notice how I cleaned up the charts compared to here. Here I have London lows, London highs, previous day low. Now that I know this hourly fair value gap is getting respected, I don't care about London highs above. I don't care that we swept London lows. I'm focusing on previous day low now. So bearish 1 hour bear respecting 1 hour bearish fair value gap. No longer care about London highs, focusing on previous day low as next draw on liquidity. Now let's go back to that lower time frame one, right? Here I have this scenario marked out on the lower time frame. I can see here, wait, let me just move my camera right here. You can see here that we have the draw on liquidity conditions. This is the 5 and 15 minute fair value gaps, which I've been going over. Here we have a scenario where price is trending lower. We're generating buy side above, and we hit a key level, a 1 hour, 4 hour, fair value gap, a new week opening gap, whatever it is, could be any key level, any bullish key level. And we finally open up that 5 minute, just like I was going over here, right? Hourly PDRA gets hit, and we open up a 15 minute. In this case, we're using a 5 minute. Why? Because we can use a 5 minute or a 15 minute. We open up a 5 minute fair value gap. I have some sell side below as a potential target, but I also have buy side above. So I'm going to use this condition to determine whether or not I want to take longs or whether or not I want to take shorts. Or in this case, since I'm most likely leaning bullish, this is how you would use it intuitively in like an actual true profitable trader. You would tell yourself here, or at least I would tell myself, okay, we're trending lower. Price on the higher, price is most likely imbalanced in this leg, and we're gonna have to correct this at some point. Now that we trade into these higher time frame bullish PDRAs, I'd want to see longs. So I'd want to see this 5 minute get respected and get an inversion to the upside. So I can take a trade right here and target these buy side levels. But if we end up inversing this 5 minute, I'll just assume price will go lower, but I'm not even gonna try to take a short. I'll simply just watch. So let's do the scenario where that 5 minute gets respected. If 5 minutes getting respected and we are inversing the leg that trade into the 5 minute, this is the leg that trade into the 5 minute, and we are inversing that bearish fair value gap, that high sign from bearish fair value gap, then we no longer care about any sell side below us. We don't care about this sell side below us anymore, right? And our focus will shift to the buy side liquidity above for our potential targets. Buy side, buy side, buy side. Cool. Now, let's say this 5 minute condition gets inversed. We no longer are focusing on buy side liquidity above. We don't care about those anymore. Our focus shifts to sell side liquidity below and anything beyond until told otherwise, right? So do you see what I'm starting to say here? And I can show you now what this would look like on, a chart example. So let me just pull up here the charts. Whoa, what's going on here? Cool. So let's look at this. If I'm looking at a day like this, and this was, Wednesday, 25th of June. This was about a week ago. I can see that price in general is very bullish, right? I can see that price looks very bullish. We've been trending higher. But what do I notice? In the process of price being very bullish, we're leaving behind some imbalances. We're leaving behind this 1 hour unfilled bearish fair value gap. So that's an imbalance in price. We also know that we never retrace into equilibrium. It seems like that 1 hour is resting perfectly at equilibrium, right? If we mark out this leg top to bottom, we can see that the 0.5 equilibrium is right at that unfilled hour. So there's a pretty high chance that we'll rebalance at least this hourly. We've already swept London highs And we've also taken previous day high. So going into the morning, I could be thinking, we are very bullish, but we are due for a correction. Do you understand what I'm saying? Because if price were to continue being bullish, we'd most likely need to at least trade back towards this 1 hour before we can continue trending higher. Do you get the thought process there? Which is why I'm trying to tell you guys that these lower time frame conditions, these 5 and 15 minute conditions, is so much more important than just the overall higher time frame. Understanding the higher time frame is important, but as intraday traders, as futures traders, as funded traders, our trades are short. We're executing between the 1 and 5 minute time frame. We're hitting 1 to 1s, 1 to 2s, 1 to 3s, 1 to 4s. We're not swing trading. So what we really want to find is that next internal move. We want to find that next draw on liquidity, because the way I think about it is, okay, knowing the bias is great because what you're focusing on is where price wants to go. But with the way we trade, it's more important to know how price is going to get there. Do you understand? Because that's where all your trades are going to be taken. It's within the process of price reaching its overall objective. So I'm obviously, it doesn't take a fucking genius to know, yeah, we're really bullish right now, right? We pumped for 140 points. But if we want to continue being bullish, we're probably going to have to see a pullback at some point, especially since we swept previous day high, we took out London highs, and we have this unfilled hourly fair value gap below. Cool. So now let me go on the lower time frame and try to find some confirmation. So we sweep previous day high, we sweep London highs, we have this unfilled 1 hour below. But when do I know that we're ready to short? Conditions. Not only do we have this unfilled hourly as a target, we have all this low resistance liquidity, which if I pull up the 1 minute chart, looks like this. So I know if I'm shorting, I definitely have some targets, being this unfilled 1 hour, being all this LR, right? But I'm going to need some confirmation that price is ready to sell off. So notice, just look how fucking important conditions is here. I see that we have a 5 minute fair value gap, a 5 minute bullish fair value gap right here. I'm going to be thinking, going into this morning, all right, I'll use this as my condition for now because this is the only 5 minute we have. So if price is respecting this, I'll just assume we want to go higher. But am I going to take a long? Probably not, because we're really premiumed. I'd rather not take a long. It's low probability. So if we end up respecting this 5 minute and just keep trending higher, then fuck it. I'll just sit out on this session. I know we have low resistance liquidity above. We have this unfilled 1 hour. I don't want to take a long when I know that price could potentially manipulate lower here. So if price were to respect this 5 minute condition, I'm assuming price is going to go higher, but I'd rather just sit it out. I'd rather just not even take a long. It's way too premiumed, right? How do we know it's way too premiumed? Well, if we mark out this leg, top to bottom, we can see that we are way above equilibrium here, right? And I can even use a more simple tool to show you this, like the Gann box, which only shorts you the 0.5. So up here's a premium, up here's a discount, and we are just way too premium to be longing. So anyways, I analyze price. I see, okay, let's see how we react once we hit this 5 minute. Okay, cool. We hit this 5 minute. We hit this 5 minute, and then we kind of displaced through it. We took out some of this LR, but we still have that overall objective, which is that unfilled 1 hour below. And so I see, okay, that 5 minute kind of just got ran through. But it's still getting respected. Is there anything else I can base, my condition off to understand this next draw on liquidity more, whether or not we want to go towards this 1 hour? Well, there is. We opened up a new 5 minute bearish fair value gap. So this is truly going to be that condition. Why? Because finally, after being bullish for so long and taking out significant levels like previous day high and London high, and we're also inside a bearish daily Fair Value Gap right now. We finally open up a bearish 5-minute Fair Value Gap. So that will be our condition on whether or not price wants to continue lower and hit this hourly, or whether or not we want to disrespect this and continue higher. So as you can see, this is the exact same drawing that I had on the slideshow. We can pull that up again just so you guys can get a reminder. All right, let me pull this up. Sorry. And so if we go back to the slideshow, this is the same scenario, right? Where we've been super bullish. We took out London highs, except London highs was a little bit lower here. We took out previous day high as well. We've been very bullish. And now if we're going to anticipate a reversal, we want to see how we react towards that 5 and 15-minute bearish condition. All right. So let's go back to the charts here. Bang, bang. And so finally, we get this condition. This is our assumption. Let's write that down. This is our assumption. We're going to use this as assumption. If price wants to go lower and hit this 1 hour, then I'm assuming we will respect this condition, this 5-minute bearish Fair Value Gap. Now, let's see if it gets respected. Okay. It looks like it's getting respected. How do we know that? We can go on the 5-minute time frame and see that we are holding it. We are not closing above it. We are respecting it. Cool. So that's our confirmation. Price is telling us it doesn't want to trade above this 5-minute bearish Fair Value Gap. It doesn't want to trade above this condition. Awesome. Confirmation. And now we need execution, which we're going to get through an inversion. What is the highest time from an inversion here? It is going to be this 3-minute bullish Fair Value Gap. So if we inverse this 3-minute, we can take shorts and target that unfilled hourly, right? And so we get that inversion of this 3-minute. Price inverses this 3-minute. 5-minute gets respected. This is the first time we're getting confirmation that price wants to trade lower, and we actually have a reason for price to trade lower. This higher time frame leg is in balance. We have this unfilled hourly, all this stuff, right? And so we can see how price plays out here. As we've taught, what do? You go break even at internal low, like this. And then we'll TP at this unfilled hourly. So this internal low is also always going to be our break even. Bang, break even here, TP at this hourly, and price trends lower for a bit, and whatever. We don't care because we already took profits. Cool. So that's the power really of those 5-minute conditions. It tells you whether or not price is ready to keep trading lower. All right. Now we see this happening realistically all the time. And you guys will start to take a notice of this. So we can go to practically any other day and show you how powerful those 5 minutes are, because they really tell you whether or not price wants to keep trending higher or lower. So let's go to like another day, for example. Wow, this day looks really choppy. But let's see if super choppy day. Holy smokes. But cool, whatever. We'll still use this day. So it seems like no 5-minute fair value gaps are created up until 10:25 on this day. And guys, the reason like I'm using this PA is because this is currently the price action that we're getting. This mentorship is designed to be as realistic as possible. So I want to show you that it works in real time. All these concepts work. Everything we teach you is applicable right now. I'm not just showing you, trades from fucking January when I won 20 plus trades in a row and I didn't lose a single month. Like, I'm showing you that it even works in these conditions because these are the conditions you're learning in right now. So let's see here. It seems like we've swept London lows. We finally opened up a 5-minute condition. Where have I seen this before, chat? Where have I seen this before? Have I not shown you guys this in the Google Doc? I believe I have. I want to pull that up now because this looks awfully similar to what I was drawing. Let me pull up that slideshow real quick. Price is trending lower. We hit a key level, being London lows, and we open up a 5-minute. So if price wants to go higher and take out all that buy side, this 5-minute should get respected, and we'll get an inversion to the upside, right? Very similar to this. Price is trending lower. We hit this hourly PD array, and we have a 15-minute condition. In this case, it's a 5-minute condition. Awesome. So it's also the same scenario as where was that? This London highs get swept, we open up at that condition. In this case, London lows got swept, so vice versa. Cool. Anyways, let's get into the real example. Wait, I hope that recorded. Pretty sure that recorded. Anyways, in case I didn't, let me just show you for 2 seconds again. Sorry. OBS is sometimes a little weaker. But you can see here, we have that London highs getting swept. 15-minute bearish fair value gap opens up. London lows getting swept. We're looking to see a 5-minute get respected. All right, so the same concept applies here. We're just going to look at it in the actual charts. So London lows get swept. Are we inside a key level? Yep, we're also inside this bullish hourly fair value gap. So we're inside this bullish hourly fair value gap. London lows has gotten swept. London highs is intact. And after sweeping London lows and being bearish for a bit, right, we've been having this bearish order flow. We've generated some buy side here. We've also generated some buy side here. And then we have London highs. So we have all this buy side. Can we build some more confirmation too? Cool. We also have a SMT there. Looks very clean. So I'm not going to be worried about these stacked lows. This isn't low resistance liquidity. Why? Because this is actually an SMT. ES went ahead and swept this. So we got this SMT. We're inside this hourly fair value gap, and we swept London lows, and we still have London highs intact. And we finally open up this 5-minute. Now let's see how price reacts towards this 5-minute. Okay. Price trades lower, respects this 5-minute, and seems like now all we need is an inversion of this 1-minute to take longs, right? So if this 5-minute's getting respected, then I can assume the price will want to go higher. Is that the case? Yeah, it goes higher. And until this 5-minute gets disrespected, then I'm going to assume, until this gets invalidated, since being the only 5-minute, I'm going to assume price wants to keep going higher. So let's see. Price wants to keep going higher. Do we ever open up another 5-minute? Seems like we don't open up another 5-minute. Price goes ahead, tries to retest that 5-minute condition one more time. 5-minute condition says, nope, I want to keep delivering price higher. Even gives you another 2-minute inverse opportunity here for an entry for continuation longs. So price trades down to that 5-minute condition. You get another inversion entry. If you're expecting price to go higher, you have all the confirmation you need. And yeah, that's the power of 5-minute conditions. So now let's see if price ever opens up a bearish condition in this case. Seems like price just rips up forever. Yeah. Now let's try to see another day. I just want to show you truly how powerful these conditions are. Oh, this is actually a perfect fucking scenario. Let's look at this. Let's see if there's an entry opportunity on this though. So let's see here. Price going into the morning, or this is actually like some lunch hour shit. Let's still check it out anyways. Or should we go even earlier? Looks kind of choppy. Let's look here. Price has been bearish for a while, right? It's selling off, selling off, selling off. We finally hit a key level. We sweep some significant liquidity. We also hit what? This hourly PD array. Look at that. Perfect rebalance of that higher time from hourly PD array. And after hitting this hourly PD array, eventually we open up a 5-minute fair value gap. So this is our assumption. This is our condition. If price wants to run higher, we should respect this condition. Or if price wants to run lower, we'll invalidate this condition. But what happens? Price respects this condition, so we continue. The price wants to keep going higher. This is exactly what I'm drawing out for you guys, and I'm showing you in real time how these conditions help you determine the drawn liquidity. I'm showing you how important it is to understand these conditions. We can even see here. Look at this. Look at this. This is actually the same fucking example on the slideshow. What happens? London highs get swept. London highs get swept. If we're going to have a reversal from here, then we need to see a 5 or 15-minute condition open up to validate that we want to go lower. So right now, all we can have is an assumption, which we see. Okay, finally, after sweeping London highs, and it seems like previous day high as well, we open up a 5-minute bearish fair value gap right here. This is our condition. If price wants to reverse this move and trade lower, maybe towards, let's say, a reasonable level like equilibrium, then we should respect this condition. If price wants to keep going higher, then we should disrespect this condition. What happens? Price respects that condition. You can see it trades into that 5-minute. And where does it want to go? Lower now, right? And it continues trending lower until we open up a 5-minute condition to the upside. That one gets respected, and then we go higher. It's actually a great example of how to utilize these conditions. And this is just going to help you maximize your understanding of drawn liquidity. It truly is just the best fucking way to trade. Like, I don't even know how else I can say it. It just shows you exactly what price wants to do all the time. It's a blessing. It's truly a blessing. Let's see if I can find anything here real quick. If not, I'll go on to the next day. So this day, let's see. Okay, so let's look at this actually. This is really interesting. Seems what's showing me that previous day I already got ran, but I want to see case hadn't. Did it give an entry here towards previous day high? Doesn't look like it gave an entry anyways. Okay, but those 5-minute conditions, man, they're just so fucking powerful. Let's look somewhere here, another day. Let's see. This is a pretty good example. So this is actually a really good example because this is something I haven't showed quite yet. So going into the morning here, we can see that price has been what? Price has been trending lower. We've been in bearish order flow. But how do we know we're ready to reverse? Because we swept London lows. But does that mean we can just say, oh, we're bullish now? London lows has been swept. You know, we're inside some hourly PD arrays, like an hourly bearish bullish for value gap. But do we know that price is ready to go higher? Well, let's see what's happening. Are we trading inside any conditions now? Been delivering lower. We took out London lows, but we have this 5-minute right above us. So in my head, I'm going to be thinking, okay, I'm going to use this as my condition. If price trades into this 5-minute and respects it, I'll most likely assume we want to go lower. And where could we go lower? I hate how it just skips the candles for me. But I see that we have some sell side here. Seems like we have some equal lows here. It seems like we have this low right here as well. I'll just mark out the obvious here. Yeah, we have these daily equal lows pretty much. And so just drag these over here. Maybe I'm thinking, you know, okay, well, London lows did get swept. And we have this 15 minutes the highest time from here. So I'm going to use this 15 minute to determine whether or not price wants to go higher or wants to go lower. And I can see that here we open up a 5-minute bullish fair value gap. So after sweeping London lows, we finally open up a bullish 5-minute fair value gap, and we're inside this 15-minute condition. So in my head, I'm thinking, okay, if this 15-minute gets respected and we inverse this 5-minute, we'll most likely want to go lower. But if this 15-minute gets ran through, then we'll most likely want to go higher and go to London highs. As you can see, the 15-minute gets respected, the 5-minute gets inversed. What am I expecting now? Price to continue trending lower, right? So that's really the power of conditions, and you can see that's exactly what happens. So I hope you're understanding now really how you're supposed to use these conditions on a day-to-day basis. It is going to be your best friend when it comes to finding the next draw on liquidity. And I want you guys to get really, really damn good at using these conditions because it's fucking OP. Let me see here. Actually, I feel like this is a good example. Yeah, perfect example actually right here. So let's look at this. Once again, what do we see here? We can see that price has, let's see, maybe mark out like previous day high right here. Previous day high is hella far though. Probably not a realistic draw on liquidity. We have this fill the hourly. Let's see. And I'm doing this on real time just to show you. Like it's not like I don't have this like pre-planned out. But let's run this up. So I see that we have this very nice buy side here. This high that took out London. I'm going to mark this out. This is high of day. High of day. And I see that we swept London lows, and we also traded into this hourly bullish fair value gap. Right? So since we've traded into this hourly bullish fair value gap and we've taken out this sell side liquidity resting inside it, which are called intermediate lows, I'm most likely going to be leaning bullish. And so going into the morning, I'll probably want to look for some longs. And I'm going to have to wait for a 5-minute condition. So if price is going to run all this buy side right here, this buy side right here, I need confirmation through a 5-minute conditioning, 5-minute condition opening up, that 5-minute condition getting respected, and then us getting an inverse. So that's assumption turning into confirmation, which turns into execution. And so this is the same example I showed you guys in the slideshows, or very similar at least. We're sweeping these hourly intermediate lows. We slept London lows. And finally, I can see that we open up a 5-minute condition. So in my head, I'm thinking, okay, cool. We're bullish. Are we going to remain bullish? I'm going to use a condition to confirm that. So I'm going to mark this out. Condition. Bang, bang, bang. If price respects this condition, which I'm assuming it will, we will want to go higher and take out this buy side high of day. If it gets disrespected, then maybe I can expect price to go towards this sell side liquidity. I can expect price to maybe go towards Asia lows, something like that, right? So now I'm going to wait to see what happens. Price trades into this condition. Oh shit, I'm sorry, I skipped ahead. And we start respecting it. So since we're respecting it, I'm no longer focused on the sell side. I'm no longer focused on Asia lows. I'm now focused on what's above me. Keeping my targets clean, keeping my charts simply showing what I want to see get hit. So I know that 5-minute condition got respected. We have 15-minute by any chance? No. 5-minute condition gets respected. And now I want to find that confirmation through an inversion. So 5-minute gets respected. We're confirming this assumption that price wants to remain bullish if we respect this. And now we need that confirmation through an inversion. We get that inverse right here. And so now we're ready to execute. We've turned assumption into confirmation. And now that we have the inversion, it's time for execution. And we can target this buy side here. I usually wouldn't leave a trade running for like a 1 to 3 here. I'd probably just close at either of these buy side levels, but we'll see how this plays out. So nice. It actually runs all this. Cool. So I hope you're understanding now really the power of conditions and truly how fucking game changing this concept is if you utilize it correctly, because it's always going to help you determine the next draw on liquidity. Our models, Blake and I's models, the PDI model, the MEC model, they all utilize conditions really. Most of the time we want to have a condition in place to confirm that the model is valid, that it's actually time to execute. And yeah, I mean, it's fucking crazy, genuinely, what having drawn liquidity mastered can do. It makes your win rate so damn high, bro. It makes it so damn high. A lot of people hyper fixate on the higher time frame, and it's not good for you. It throws you off. So I really hope you guys paid attention to what I was saying today with these conditions and how powerful they are and how helpful it is for you to understand, where the next draw on liquidity is, and you can start implementing this into the system. And yeah, I mean, this is a blessing of a concept to understand. And it's always kind of weird for me, right? Because I'm teaching you guys this right now, and it almost feels like I'm kind of explaining like what shapes are. Like, this is a square, this is a triangle, because it's like so second nature in my head right now, where it feels entirely so like non-complex. But if you're watching this and you're thinking like, damn, like that really just opened my mind to like how price moves and like what I should be looking for, then like that makes me feel good. But I've like taught lessons like about conditions and stuff so much now that I'm just thinking like, damn, everyone probably already knows this. Like, this has to be common sense. But maybe you don't know it. Or maybe I taught you something or a way of seeing it or explained it in a way that you haven't heard before that really like opened your eyes or helped you understand it better. So if that's the case, I would love to hear some feedback from you guys. You guys do have access to founding members calls, ICT Inner Circle 1.0, Inner Circle 2.0, and every class that we've done before. So if you want to try to find like Easter eggs and like the other conditions videos that I've made, you can go ahead and check that out. But it's you guys are like the first people to genuinely have access to the whole vault, the whole fucking treasure chest of information. And it's because we just want to make you guys some demons, bro. We want to make you guys some fucking animals. For those of you who want to overstudy and look into previous mentorships and how we taught them and how we describe something, to brush up on stuff, then that never hurts. But I hope you guys enjoyed this lesson on conditions, and I hope you enjoyed the slideshow, the little real life examples. And yeah, I mean, keep fucking crushing it, guys. Keep fucking crushing it. Keep watching these videos. Keep grinding. Homework for conditions, I would say, since you guys have already seen the MEC model and the PDI model, I simply want you to show me, in a trade, that 5 and 15-minute condition. Like, mark out the condition. Or do this, actually. Mark out the condition. Say, okay, if this 5-minute or 15-minute for value gap gets respected, then I'll look for these levels to get hit. But if it gets disrespected, then I'm assuming it's going to go to these levels. Do you see what I'm saying? Break me down that 50-50 scenario of if this gets disrespected, we'll go here, and if it gets respected, we'll go here. But that's the beauty of conditions, bro. It's helping you create these if-then statements. If this happens, then we'll go here. But if this happens, then we'll go here. And the way I've always described this to people is once you become a profitable trader, you'll realize that you're always creating scenarios in your head. And this is going to sound kind of fucking crazy, but have you guys ever sat in a classroom and thought like, yo, what if someone were to fucking burst in here right now and like with a gun or something and try to shoot up the place? Like, what would I do? How would I protect my classmates? Would I get behind my desk? Would I, it sounds crazy to think about, but as humans, we do this a lot. If you're driving a car, maybe you're thinking, what if this guy in front of me like brakes right now? Or what if he swerves this way? Like, what do I do? And so you're constantly creating these scenarios in your head so you can prepare yourself in case anything were to happen. One that I do all the time is like when I'm in a movie theater, I'm like, dude, what if someone were to fucking walk in here right now and JFK me or some shit? Or whoever that was that got shot in the movie theater. And I'm always like just thinking of all these possibilities, bro. So yeah, it's the same way with trading. You always want to be creating these scenarios in your head, and that's what conditions allows you to do. Okay, if price wants to go higher here, we should respect this 5-minute, but if we disrespect this 5-minute, then I would like to see this happen. And that's really the whole goal of this, to turn assumption into confirmation, which inevitably turns into execution when the model presents itself. That being said, thank you guys so much for watching my lesson on conditions, and I hope you guys have an amazing day.